All right. Good morning, everyone. Can you see my screen and hear me? Let me know in the comments section that you can hear me okay and you can see my screen. And I'll get started here, go over some things before the market opens. Thank you, Eck. I appreciate it. Welcome to the stream. All right. So it sounds like we're good to go there. Um, so in this stream, we're going to go over, before the market opens, we're going to go over a few things. But the main purpose is we're going to trade the indicator live. We've been doing it every Tuesday for the last few weeks. And you can see on the screen we are giving out a discount code, 30% off your first month with the code monthly30. So you can try it out. We do have a 30-day money back guarantee. And um, so if you want to get it and paper trade it so you don't have any expense or risk whatsoever, just check it out. You can do that. And if you don't like it after 30 days, you can get your money back. Um, this is a trading view only indicator. So if you look in my indicators over here on the left, I have IWJ Pivot Point Pro. If I can turn it off and on. If you look in the yellow, you can see the buys and sells go away. And essentially what we've done is we've tried to make trading as simple as possible. And I mentioned in yesterday's video, if you didn't check it out, you should go check that out. I'll be doing a podcast very soon on the psychology of trading. And I just wanted to share a couple little things that are going to come out of that I think will really help people out because the trading, what I'll call universe cycle, for a lot of traders is that they find a system that they like, they try the system, they don't follow the rules, the system doesn't inevitably doesn't work because they don't follow the rules, then they blame the system, move on to the next system, do the same thing over and over in an endless cycle of hoping to find somebody help them trade, never realizing that they've been helped quite a bit. They just can't control themselves. The psychology of trading is the number one reason people fail. So I'm going to put a little bit of the information that will be on this podcast and things that we'll go over that I think will help a lot of people. So just this is high level stuff. Each episode will be broken down very deep. But, we're going to go over psychology. Markets are mirrors. They reflect you, your discipline, fear, greed, and overconfidence and doubt. Most people lose not because of strategy, but because they can't follow one. So many people are given winning strategies and just can't follow them, and then they blame the strategy because they traded outside of it. And that's just not simply going to work. Self mastery equals market mastery. You have to conquer yourself, or every system will fail you. And you must track your emotions like price action. You have to accept uncertainty. Nobody knows what the market's going to do, and in fact, I say they're chaos, and you don't really predict them. You dance with them. You let them lead, and then you follow. Hey, here's what the market's telling me today. I'm just going to listen to the market. I don't go in with a bias of the market's definitely going up or definitely going down. Trying to control that is an illusion, and your only ability to control the market is how you respond to what it tells you. You need to be stoic, get all emotion out of your system when you trade, because you're not entitled to outcomes. You're only to preparation and execution. And all that means is, the final bullet explains it. You have to think probabilistically, meaning you have to take trades that are great setups. Now, does that mean that every great setup is going to win? It does not. In fact, you're going to lose a lot as a trader. That's just part of trading. And most people can't fathom that they should lose a trade or even several trades, many trades, a week's worth of trades. And that's just that's not correct thinking. The market is finding an edge and then applying that edge relentlessly over time and letting the probabilities play out. The highest probability trades are probably 60%, and you apply that edge over and over with good risk reward, and over the year you'll make a ton of money, as we do in our room by doing this. And then I always laugh at people on YouTube that want to tell me I'm right or wrong, and why. And quite frankly, I don't care. Um, Trading probabilistically frees you from the need to be right. You know, you're playing for this edge. You're playing for the probabilities to play out. I don't care if I'm right or wrong. I care that I have a good trading system and I apply it correctly. And that's how you beat the market, and that's how you win at trading. Um, Being right or wrong is completely irrelevant. And then losses, most people treat them as failure or shame or fear, and they're just not. I mean, you're going to lose. Everyone does. It's part of the game. Best traders lose small and fast, emotionless, and they're focused. And then a red trade is feedback and not failure. Um, so just some things that we'll go through in the psychology podcast that will be free. That'll be something that I haven't decided if once a week or twice a week, but that'll be something that comes out 30-minute episodes or so where we go through that. So just keep an eye out for that. I think it'll help a lot of traders understand more about themselves and the market than they have in the past. And potentially, sorry, is it probs? Is that better for volume? And potentially improve. I mean, if you can recognize where your faults are as a trader, that is a huge, huge thing. So we do have an indicator that we use again, IWJ Pivot Point Pro. It's a very good indicator. Does it have losing days? Absolutely. We've live traded a few losing days and some winning days. Our winning days far outweigh our losing days. We make money on this pretty much monthly. If we look at our results for the last year and a quarter, we'll see that in 2024, we applied our edge relentlessly, as I said in the intro there, and we were up $35,000 based on a $100,000 account. So this is 35% for the year. It's a really, really nice year. This year, even better. First quarter, we're already up $29,000 on a $100,000 account. January was absolutely magical. February was pretty good. March, another great one. April's going to be a good one. It's just about over here. We got today and tomorrow. It's going to be a winning month. So we continue to make money with the indicator following the system I put out. I always tell everybody you're allowed to trade however you want, but I'm giving you a system that works. So your choices are use a system that works or be looking for trading advice and help, obviously, because you bought an indicator, and then try to improve upon what a professional trader put together. So most of the time when you do that, that ends up failing. And I don't want you guys to fail. My whole goal in life of my life of trading is to help other traders. It's the reason I started doing this. Trading is a lonely game. You sit here by yourself in front of a computer doing nothing except watching bars go up and down. And so when I realized where the market was headed, I wanted to help people understand how to protect their money. I think if you ask anybody in my room, over the last year, their money's been pretty dang well protected. As I moved them out of the S&P and into precious metals, and gold and stuff has gone off the charts, and our fund has gone crazy, and we've protected our money really well during this crash. So just a little bit of backstory on that stuff. So the system, I'm going to explain it really quickly, and then I'm going to show you where you can find out more about it. Anytime you see a buy, you buy. Anytime you see a sell, you sell. And then there are some rules for days where we trend. Trend days are not good trading days for anyone, at least day trading. So I try to identify the trend early and then maybe take a shot or two at a reversal, but ultimately sit out pretty early on those days to limit our losses. Because all good traders are looking for reversals. If the markets are, well, that's not exactly true. There are people that play momentum trades and stuff, but we're looking for critical resistance or support or critical resistance to hold and the market to do this. And more often than not, that is going to happen. However, there are trend days. Trend days mean that they come down. The indicator looks at, so this is a high volume level here, this HVL 0 DTE in blue. The market's coming down into this level. If you get a buy signal off of this level and take that trade, that's an excellent trade. This is a super big support level. You're getting a buy signal, you would expect that to play out. However, on trend days, we come down into this level. The market gives you a little bit of a bounce. You get a buy signal, but the market just continues through it, and you end up losing that trade. And on trend days, this just continues to happen where they continue to bounce slightly off support, not enough to give you a winning trade, and continue in the same direction. So we're not looking to chase these moves. We're looking for support and resistance to hold. And when that's not going to happen, we just go ahead and call it for the day, because the indicator is going to continue to look for support and resistance to hold, because that's what plays out more often than not. So when we see a buy, we enter 0 DTE options, usually about one strike outside of the money. So if they were at 549, we would go to, on a put, we would go to 548, and on a call, we'd go to 550. We put our stop about, I've been going a little wider because of the higher volatility lately, but about 50 cents lower than price. So they're at 548.30 right now on the SPY. So our stop, if we had a call, would be 547.80. That's 50 cents down to the downside. This keeps our losses small. We're looking for this support to hold, so we would not expect them to spike through here very far and then reverse. So if they do reverse off this level head, we got a buy here. Our stop would have been 50 cents lower than actual SPY price. We take our first 1/2 profit at 20% gain. So if our option price was $1, we would take our first half of the trade off at $1.20. What this does is it basically eliminates losses. So you have your stop loss down here. You have your 20% about right here or so, wherever. And these things wash out. Okay, this is basically a wash. And then where the wins come in is you take your first half at 20%, and when the trade keeps running, which happens quite a bit, this all essentially becomes profit. So this all washes out. The small wins wash out your stop losses, and then the running wins, the second half of the trades, are all profit. We apply this over and over again, and it gives us, you know, some people are like, well, I'm not here for 20-cent wins. Well, I trade 25 contracts, and a 20-cent win is $500 for the day. And if you make $500 every day for 200 trading days, you're going to do pretty dang good. So 20-cent wins to me are very profitable overall. So I hope most of that makes sense. This can be used for swing trading. It can be used on any stock. If you're going to use it on another stock, you simply come into the settings and you go to the inputs. And right now, when you're on the SPY and you're trading the SPY, this needs to be pointed at ES and NQ, because what we look for is confluence in the market. We look for the market to be in sync across all three. So we want the SPY, the ES future, which is the SPY futures essentially, and the NASDAQ futures, all to be pointing up or down at the same time, and all to be having the parameters met for a buy or sell. And that's when we see the buys and sells on the chart. And when the market's moving in the same direction across many indices, it indicates broad buying or broad selling, and it gives you a much higher chance of the market fulfilling your trade. But if you want to trade a different stock, so let's say we want to trade Apple, you just come in here and click. You type in Apple up here and then click on it, and then it will populate this with Apple, and you do the same. You want them both to say Apple here. So this would say Apple, and this also says Apple, and you change this to 1. So that's how it works. Guys, the 30% discount, this is the only time you get it, is during these live streams. So if you want to take advantage of that, please do. Again, 30-day money-back guarantee. To sign up and use the coupon, it can be a little tricky sometimes. So let's look at that real quick. You come over to my membership plans page at investwithjacob.com/membership plans. Scroll down, you'll see we have our monthly rooms, daily live calls. I do an hour live call where I go through all of the major stocks. So we go through the ES, the NQ, the SPY, the Mag 7, Bitcoin, gold, and then whatever anybody asks about, we also go through. You can check it out for $5 if you want to do that. It's a really great deal just to see what goes on in our rooms. So you can do that before you try to become a member. And then down here, you see Trading View indicators. Click whichever one you want. And then it'll take you here to the sign up page. So two things that are a little tricky. Number one, the coupon. If you scroll down right here by where you click the pay option, it says have a coupon. Click on that have a coupon. It will open a box, type in the coupon code and hit enter. That's how you apply the coupon. Then pick whether you want to use credit card or PayPal and hit sign up. You will enter your payment information on the next screen. A lot of people think they're supposed to put their card in here and you can't do this. You just click a button, one or the other, hit sign up, and it will take you to the next screen where you can enter your payment information. Once you do pay and you get access, you'll come over to this page here. Read all of this, guys. Don't just skim through it because this is important. There's important things in these directions. First, you got to fill this out. So I have your TradingView username to give you access to the indicator. Second thing is you must have an essential account and you need real-time market data. This is the one you need, the E-mini included. It's a $7. This is for TradingView. If you don't have a TradingView account, there's a link right here that says click to open a new TradingView account. You get a discount in TradingView if you use this link. And full disclosure, I do get a kickback for that, but we both win. You get a cheaper TradingView account, and I, get a recommendation fee. And it tells you how to set up TradingView and the indicator. Goes over our day trading strategy, our trend day strategy, and our swing strategy. So that's everything you need to know to use the indicator. And again, we'll be trading it today. They're trading down here off this HVL. I hope they hold until the open and don't give us a buy signal yet, because that'll be a great place to trade off of. If they break through that HVL, our next support down is going to be 545. Our next major support, actually that's not true, right here at 546 and 545. So that 546, 545 area, major support zone. We would look for the bulls to hold that area and try to push higher. And the first major resistance is 550. And then after that, it's pretty open up to 560, I believe. 558 and then 560. So those are going to be our major levels for the day on the SPY. We'll need to watch those areas heavily for buys and sells. Does that mean our buys and sells have to come off of those areas? No, it definitely doesn't. If the conditions aren't right for a buy or a sell, you're not going to get a buy or sell. So keep all that in mind as you are using the indicator. You can identify highly traded areas where you might get a buy or sell, and you can always prepare yourself. So we're in a sell right now. You can see there was a sell issued at about 550, and they've been selling down. So prepare yourself for trading. We know that the next signal we're going to get is going to be a buy because we're in a sell cycle now, right? And one of two things happens when a sell or buy hits. You're either going to get stopped out and stay in the buy cycle, and then you would get a new sell, or you're actually going to sell down like we did here, and you'll get a buy as your next trade. So when the market opens, be ready for a buy signal to appear because we're in a selling cycle right now, and we're looking for a place for it to reverse. Any questions before we get started? We got about 11 minutes before the market opens up. If you haven't watched my video yesterday, check it out. We are looking for a potential wave 4 still down. It's possible that they finished it here in a flat kind of sideways action, but it wasn't very deep. If that's the case, I would still expect them to come down into the 5440, 5400 area for wave 4 of this C wave up, and then 5 up to 5700 into our box that I drew quite a while ago that I said we'd come back to. We are here. They tested it yesterday at the bottom, but I do think they'll get up to about 5,700 just based on the overall structure. And so that's where we're looking for the market to come to. Nothing really changed overnight. Market was basically sideways. If you want a more in-depth explanation, you can check out my video that's posted on YouTube. It should be the newest one on my channel besides this live one. Happy Tuesday, guys. Tuesdays have been bad trading days, so we'll hope today is a change of that. We've had a couple trend days on Tuesday, last couple Tuesdays, and they're just not fun to trade. Trend days are again, bad trading days for day traders. And the quicker you can identify them and the quicker you can learn to sit out and discipline yourself to do that, the better a trader you will be. Hey, if you're here for a get rich quick scheme, you can go ahead and move on. That's not how this works. We trade discipline, good setups, and you're going to have winners and you're going to have losers, and you are going to win more over time than you lose, assuming you follow the rules that we put forth. So if you're looking for promises of riches tomorrow, I don't have that for you, but I do have great trading, and I do have a great tool that will help you trade, and it does come with a money-back guarantee, so you can test it out on your own and have your own opinion of it. I'm not a big fan of hopefully we get a spike down at the open. Looks like they're going to try to trigger a buy here. And we don't trade anything from the pre-market. That's one of our rules. People break these rules all the time and then can't understand why they don't win. The reason we don't trade pre-market or post-market, by the way, is one, on the SPY, it's, there's only a couple platforms that I think that even allow that. And two, it's really low volume trading, and low volume trading is very choppy in general. You're just not getting, very often, you're not getting sustained moves. But it does help with market trend because it defines the pre-market low, it defines the pre-market high, and those are very, very important places to know when you're trading. Because more often than not, the market will be contained in this range here. And then when it breaks out of those ranges, that's when we have trend days. Now, we've had a lot more trend days lately. We are in a C wave, so that matters. So if we zoom in here a little bit, got a few minutes. I won't do like last week, though. I'll know the open's coming this week. Actually, we didn't need to zoom in. Let's zoom back out. Sorry, guys. Still early here. It's 6:23 a.m. where I am. We've been in C waves, right? So you have A, B, and then this is a C wave down. So this started all the way back on the 14th of April. This is a C wave down. So in C waves, you're going to get a lot of trending because that's how they work. They're very strong waves. And then once you complete this C wave, you're in a C wave up. So from April 15th or whatever I said till now the 28th. So that's 2 weeks of a lot of trend days because you're in C waves. But more often than not, you're in A waves where you get these choppy up and downs, or you're in a B wave or whatever. But this was C of B, and this is C over bigger B. And when you have C waves, you're going to trend. So the last 2 weeks, tougher trading because there's been so many trend days. But that's, again, part of it. That's how it works. You have winning and losing days, and you have days that you need to follow the rules and just sit out. Trend days are those days. You should always be looking at a big picture view of the market and understand, yes, we are trading for smaller edges on day trading. We're just looking for 7 to 10 point moves at first and hopefully continuation. But in the big picture, that will help you just understand what the market is supposed to be doing. So if you know we're in a C wave up, or that's the primary count, then you can say, okay, well, then we're looking for very likely trending type stuff where if they start to break out of the pre-market high, I can definitely see them continuing into the next major resistance area, and we'll see what happens there. So understanding bigger picture context is important um, for both your trading mentality and market understanding. So you can understand the bigger picture context of where we're headed. I try to keep these informative and teach as much as I can as it comes up. Hopefully this is helping some of you guys, or you're getting a little bit out of it here in the pre-market as we wait for the market to open. I know that sitting around watching bars can be very boring, so if we're not going to be trading like pre-market time, we can go at least learn some things and improve our trading, or try to improve our trading. Let's go see what the banks look like. Okay, the banks are going to be basically flat at the open. SMH can be red at the open. Nvidia, red at the open. Meta, red. Microsoft, red. Netflix, red. Red. Okay, everything's opening up mostly red here. The 21 and VWAP are going to come in at the call resistance wall. That's going to be a major point of contention here, which is about $1.20 higher than we are right now coming into the open. Assuming we don't get a buy signal in the pre-market here on this last bar, I would expect a potential very quick buy. So do have yourself ready for that. All right, guys, getting ready to open it up here. We'll see what we get. What I'd like to see is a quick jab down into here, the pre-market low and this high volume 0. I'd love to see a jab into here and then a turn and a buy signal. That would be most ideal, but we'll see. We'll see what we get. Like I said, I have widened my stops just a little bit because of the high volatility we've been seeing. So, 50 cents usually covers it pretty well, but I've been moving them to about 70 cents, sometimes even a little more, just depending on where we're at and on the chart and those types of things. So keep that in mind. Okay, there was a buy signal right there, so we are going to take that at 252 with our stop being 548.50. So as soon as we see the buy signal or sell signal flash, we take the buy or sell to get in at the best possible entry we can. Our first take is going to be at about $3. Which hopefully will coincide with hitting VWAP here or so, because this is going to be a strong resistance area. And there are times, guys, where if you're trading this and our first take is 20%, but we're looking at a triple resistance wall here. So you have the 21 EMA, VWAP, and this call wall at 550. If we're at like 18%, sometimes I'll take it there because this is going to be hard to get through on the first shot. Sometimes I don't. It just kind of depends, but you can do those things. You can adjust a little bit to make sure that you're, grabbing a winning trade out of, snatching a winning trade from a losing trade. For instance, right here, they just rejected the 21 pretty strongly. They're going to come back and test it again, but this is going to be a tough resistance area for day trading resistance. We're not talking about a complete rejection meltdown necessarily. That can happen. But you're just seeing, the bounce back off where they can't get through and then they start to continue to the downside again. Maxime, it's a 21 EMA. Is 5-minute chart better than 1 minute? Use the indicator. All charts are better than the 1 minute, yes. But I use the 5-minute. Again, this is about what I talked about. If you watched any of the intro, if you didn't, please go back and watch it. But following the rules that I put out for how I make the money I make is how you're going to make the money I make. You're not going to... Can you tweak it and make it better? Sure. I'm sure you can. But as I said in the intro, you've been handed a system that prints money from a professional trader who trades full time. And you're presumably looking for trading assistance, which is why you bought the indicator. So if you're looking for trading assistance because you need help, trying to tweak what the professional gave you is generally not a good idea. If that makes sense. Hopefully it does. It's like knowing nothing about math and walking into the math class and trying to tell the teacher how to teach. It just isn't going to be a really great idea. And it's okay, guys. In fact, not only is it okay, it is what will change your trading journey. It's okay to look in the mirror and say, you know what, I'm not good at trading. If I'm honest with myself, I have a losing year every year or whatever. I'm not saying you guys have that or anybody has that, but there are people, 95% of day traders are failures. So the 5% follow the rules and the 95% can never come to the conclusion that they are the problem. Well, not all of the 95%, but a great deal of people want to place blame elsewhere. I've blown up accounts, guys. When I was a younger trader, I've blown up accounts, like blown them up. Went through a whole account in one day one time. It's okay to be a bad trader. It's not okay to stay a bad trader. Okay, so they came to the 21 here. They are rejecting it on the second bar. Not to stop us out yet, but we'll see if they can hold this rejection and push back through. That'll be a key to this trade, because if they do, we're likely on our way to 531 or 551.39 next. But that's a big if. They got to be able to get through the 21 in VWAP. And that's going to be tall, because you do have a down sloping 21 in VWAP. So that's why the first time you're getting at least a little rejection. So as you down slope this, it's going to reject to the downside. Coming from the bottom, it's going to reject a little. Our hope is that it's a weak rejection and a push through, and that's what the indicator is telling us. And that's hopefully what we're seeing right here, is a return and push through. This is a good sign. If they can turn this green and get above this bar right here, that'd be a very good sign. Still some stuff to get through here. They got to get through 550. If they get through that, then 551 to 551.39 becomes a very likely target. So what happens on every price level, guys, the bigger the price level, the bigger the squeeze and the bigger the move. But on every price level, there are resistance zones. Sometimes those resistance zones overlap, meaning the 5 minute, the 1 hour, and the 1 day all have the same resistance or support. And sometimes they don't. But these two are 5 minute resistance, meaning that, they can get pushed through in 10 minutes or so if they're going to. But what happens when they break is you get mini squeezes. So there's a bunch of sellers sitting right here trying to push the market down. The buyers are trying to get through. If the buyers get through, those sellers convert to buyers, causes a little mini squeeze, and you come up here to like 551 in a hurry. The bulls have tested 3 or 4 times in this 5 minute bar and been unable to get through. If they come back, I can't imagine the bears can hold too many more attacks, but we'll see. We got to see if the bulls can even get back up there again. But that is the norm in our society. The less you know, the more you talk. It seems like it, doesn't it? It seems like it. There's a lot of people talking that should never speak, but somehow they get a microphone. Okay, guys. Can you hear me again? My computer crashed. Okay. Sorry, guys. Trade going very well. My streaming software, not so much. My computer crashed there. I apologize. We closed half for $3. I'm working on getting everything back up and running here. Um, my apologies for the technical glitch. Very annoying. Okay, so we closed half, blew through here. Indicator gave us a perfect entry at the open. Doing well. Let's zoom in and get this set back up. 1 second here, guys. I'm working on getting this all back to where we belong. Oh my gosh, with this. I'll update stops as soon as I can here, guys. Okay, let's move moving our stops to 280 here. Okay, sorry guys, I'm still trying to get everything reloaded here on my computer. I wanted to get the stream up first, trying to get caught up with. Okay. Technical difficulties. There's something. Okay, we're going to close another half for $3.40 here. And move our stops to 290. Reason we're closing a little bit here is if you look on the chart, I'm getting there with everything here. Hold on. when you look on the chart, you've got some heavy resistance coming in right here. So this whole line of resistance that they're coming into can easily give us a big rejection. So we want to lock in some more gains here. And that way, if they do reject, we still get a higher value on our trade. So we take another half of remaining off, which leaves us a quarter of our position to run the rest of this move up should they break through this heavy resistance zone. Almost there. We're going to have a normal stream again here. Oh, there's a good pop. Okay, so we are at this one. Okay, we're going to move our stops to $3 here. So they're trying to get through. You can see the rejection they got spiking through. We'll see if they can battle. If they do battle, we're probably on our way to 552.84, the pre-market high. And we'll see what happens at that point. Okay. All right. I think I'm back up and fully running now. I apologize, guys. I'm glad you're still here. If you are still here, I hope you took the trade. It was a winning trade. And I hope you see how the indicator works. Got the buy signal, first bar of the day. And let's see, 5, 10, 15, 20, 25 minutes in, we have a nice winning trade and a market that is trying to break over this support. And again, that would take us into 552.84. This is the type of stuff that happens quite often with the indicator, getting the basically the bottom of the day and getting you in at the bottom and riding the move up. So really nice move here. We do this over and over again and just have a lot of fun doing it. So take advantage of that 30% off, guys. That only happens during these live streams. You don't get that again till next Tuesday. So part of the benefit of being on the live stream is you get that first month discount. If you want to check out the indicator, remember 30-day money-back guarantee. You check it out for 30 days, it's not for you. Just shoot me an email, and I'll gladly refund your money. Not gladly, because I want you to be a part of the group and the team and what we're doing here, but I'll refund your money. No questions asked. That's also not true. I might ask you a question. I might ask why you didn't like it, more because I want to make it better or understand where people are falling down. So I might ask you why you didn't like it, but not in a way that I'm trying to keep you. I'll respect that you don't want it. Do you consider a SS of sell signal a buy signal, especially in a bullish market? No. So if you watch the videos on trend day strategy, I explain there is a strategy for that, only on trend days though. On the weekly swing charts, yes. That's a very different thing though. We're looking at very big moves there. But on the 5-minute chart, not as much, unless it's a trend day and you want to use that trend day strategy. I personally don't. So just keep that in mind. Do I have to make any adjustments on the indicator settings to trade in NASDAQ or NQ? No, for the 3 that are already set up, so the SPY, ES, and NQ, they're interchangeable. But if you go to a different stock or a different RTY or something like that, you need to point it at it, like I mentioned early in the video. Sam says, I can confirm that the money back works, got refunded, and once, and then came back. Thanks, Jacob. Thank you, Sam. 1, thank you for coming back, and 2, thank you for saying that. I know that YouTube has a lot of shysters out there, and hopefully my people will tell you I am not one of them. I try very hard to deliver a lot of content and value and training and authenticity to my people. If we lose, we lose. If we win, we win. I go through it all. I discuss it. I'm not afraid of it. I don't back down from it. Um, it's just part of trading, and so that's how I operate. But I really appreciate that, Sam, because I can say it till I'm blue in the face, but nobody will believe me. So they spike and rejected. So we took profit right here, and this is the exact reason they spike and rejected it. We'll see if they can hold above our stop here at $3. But if they don't, we have a nice trade, and we might look for a sell signal. Oof, holding on by a penny. Wow, if they go back up here, that'll be great. We held on by 1 penny there. I don't know that that's going to be the case, but if it is, that's awesome. Those are always fun days. They make up for the days where you get stopped out by a penny. Hi, Jacob. Do you think we are still going down to lower? It depends. What time frame are we talking about? I mean, there's still a potential for a wave forward down. However, as I mentioned in last night's video, it's very possible we just ran a flat there, and now we're going to break out in 5. So that's certainly a possibility that you have a little bit of a pullback over the next few days. But the market action right now is starting to favor the bulls again. So in the short term, I mean, there's a potential for a little pullback. In the medium term, like maybe the next week or so, if we get up into that box above, I think that there'll definitely be rejection out of that box. And then how that market pulls back from there will tell us if we're going to be heading much lower or just pulling back and then reloading for all-time highs. Now, typically, when you have a failed breakdown, so we came down to here's the pre-market low, and then in the pre-market they came down, tested it. We came out, moved down for a second, and now we're breaking back above the VWAP and EMA 21. Typically, when that happens, you're going to at least test the pre-market high, which is 552.84. They will likely reject, and then we'll see if they push through after that. But they are above the major resistance zones. So if we move this a little bit over, they're above this call resistance zone, or getting above this call resistance zone at 551 now. Okay, so that updated when I updated the Mentor Q. 551 is the major zone. You can see they're struggling with it. And all this means is if they get above this zone, it's likely a gamma squeeze up to 555. So the next major point of contention is the pre-market high at 552.84. If they can get through that, you have this week's high right here at 553.56. And if they truly want to squeeze, then we're looking at the 555 zone. Do you know if there's latency induced by YouTube? Any possibilities there's a few seconds delay? Yeah, I think it's a 10-second delay or something. I think that's accurate. But the trades are coming up. It should come up in real time in Discord because I'm typing them in as they appear, and I don't have latency on my side. It can still go down from this high too. Yeah, it can do whatever it wants. I mean, it doesn't have to follow any plan. That's the major misconception about, well, Elliott Wave specifically, is that Ellioticians um, are trying to, what's the right way to say it? Predict the market. Okay, well, there's a stop out. Nice spike, guys. Um, so we got stopped out at $3 there. Let me update the. Must have been news at 7 or 10, whatever. Average exit. 1 second here, guys. Let's see. We got half for 3 there. 320. So our average exit on that trade was $3.10, a 60-cent winner, which, times 25 is about $1,500. That's pretty good. Pretty good for a few minutes work. Let me get that. Let's see if we get a sell signal here. Whatever news came out at the 10 o'clock hour was a spike. We'll see if they can follow through or if it was just a stop run. Oh, Jolts came out, yeah. Right now it's looking, well, we'll see. We'll see. What was I saying before? Oh, a common misconception is that Ellioticians are trying to predict the minute-to-minute market moves. Um, I think if you're going to use Elliott Wave, you need to look at the big picture and understand that the big picture patterns play out far more often than they don't. And then in the minute to minute, it's only about key levels. It doesn't matter. I don't really care which way the market goes. I understand both directions. But what I'm looking for is trade setups and key levels. That's it. There's not some I'm right, you're wrong scenario. There's just the market. And or you're right, I'm wrong. For me, it's here's how it can go up, here's how it can go down. Here are the levels that matter. And when those levels break or when those setups appear at the levels I'm looking for, that's when I can trade. And that's it. The idea that you need to be right or wrong about the market is egocentric and will cause you bias, extreme bias, and it will cause you to lose money because what happens is you think the market's going to go down today since it went up, and it opens like this, and you're like, okay, well we're at resistance here. Now it's going to go down, and then you don't have the understanding or the ability to say when you're wrong, or know the key level to know when you're wrong. So it goes above this one, and you're like, okay, well there's another resistance right here. Now it'll go down. Well, it didn't. Okay, well now it'll get to the pre-market high, and then you know what I'll do? I'll buy more puts up here, and then it'll go down because you have such a bias that the market's going to go down. It doesn't matter. When the key levels break, when support holds, when something happens, you need to adjust and change your opinion on the market. Your opinion can change minute to minute on the market, and I wouldn't fault you for that. I would, in fact, applaud you for it, for having the mental capacity to say, I'm wrong. Now we're going to go this way, or now it's going to do this. Because if you don't have the ability to adjust on the fly, then you will lose your money trading. Simple as that. Am I still here? Yeah, can you guys not hear me? Magic Hand Puppet. I'm new here. Just found you in my feed. Could you please give a 20-second big picture take on the market? I have a lot of videos for that, but yes. So in my opinion, since we're in a up cycle here for a second, we probably won't get a trade for a minute here. In my opinion, 20-second, actually, you know what? I'll open a different chart. It'll make it easier. Well, good morning. How'd you sleep? No, I am. I'm live. You're good. Tell me before you leave for school, okay? Sorry, guys. Family first. Gotta say good morning to my daughter. So big picture, 20-second. Sorry, magic hand puppet, a little slow. Um, we are completing this big circle 5 of a major super cycle 3. Now, I do think that there are 2 possibilities right now that we are tracking. One is that we are making a B wave here and then going to start the next move down that will come into this October lows of 22 zone. Then you'll get another big one and a move down, another move up and a move down. 20 seconds, so I'm doing it quick. Ultimately, though, targeting the 1600 region. There's a lot of reasons that region is important. Ultimately spanning the course of 10 to 20 years and having a lot of ripping bull movements that will be corrective lower high type bounces. But there is still room for one more all-time high, and it's really going to depend on what happens once we get past or get into once we get into this box right here between 5,600 to 5,800. I'm looking at about 5,700, this breakdown area right here off of this B wave high. Should we get that, if we get a corrective pullback, then we would look for a C wave higher to all-time highs around 6,400, 65, or 6,400, 63, 6,400. Should we get a 5-wave pullback off of that area, that would be what leads into that major correction I just outlined. So big picture, they can make another high, but ultimately big picture, like months and years out, I am looking for a major pullback corrective market. And for those of you that think that's crazy, I invite you to check the chart of Bitcoin. I invite you to check the chart from 2000 to 2009 of this market, where the market lost 66% of its value over 9 years. That particular corrective period was 1 degree smaller than the one we are getting ready to face. So it's certainly not unprecedented for the market to lose that much of its value very quickly. I invite you to look at NVIDIA, that's already lost 33% of its value in the last few weeks. If you think that markets can't crash or do those types of things, you are a very new student to the market. Just because we've been in a long bull run, that people forget about the bear markets that are really nasty. And 2000 to 2009 was a particular one. Okay, so I said we'd hit the pre-market high. We have done that. Unfortunately, this stupid spike at 10 o'clock got us out. It is what it is. But a good trade so far. If they trend here, we probably won't get another entry on the long side because the buy signal is still active. We just happen to stop out on the spike down. But still a good trade nonetheless. You know, like I said, $1,500 for 30 minutes work is a pretty good day. Again, you only get this 30% off, guys, while we're sorry, we only get while we're on the live stream. Sorry, I have ADHD. I'm pretty open book, and I get a lot of squirrel. My head turns, and then I'm into something else. So sorry if when I drift off on a conversation. I'll come back to it. Someone said something about breadth indicator. If that shows the crash isn't coming, is that true? You'd have to be more specific. There's a lot of indicators that say a lot of things. Statistics are great until they aren't. I know a lot of people like to use statistics. Oh, if X happens, then over the last 10 times that's happened, you know, we've gone up or we've gone down. There are a lot of conflicting data points out there. So, I think that even if that indicator, whatever indicator you're talking about, is right, that's the all-time high push. You know, from here, that's a 600 point push, and then the crash, or then we start to come down. But, you know, we just take the market level by level. I'm not playing for the crash until the crash is here. Now, does that mean I'm not protecting my money? No. As my people will tell you, last year in April, we got into gold, and gold's up 60% over that time. Our 401ks are absolutely flying. So we protect our money. We are cautious about the market, but until I actually see the breakdown, we're just going to take it level by level. There's no sense in looking out 2 years on the market. You can have an idea to protect your money 2 years out by moving your money into more profitable markets. But to play for the crash, there's going to be so many opportunities during that move down that you don't need to try to catch a top or try to catch, wherever. You just need to confirm it first. When you say half position on the buy call, does it mean that you traded 15 contracts instead of the typical 30? No. So my half position is 25 contracts. That's just what the size is. My full position, if I was going to go to a full position, would be 50 contracts. To be honest with you, I don't know why I've never switched to full positions. When I was first trying the indicator, at the very beginning of time of it, before it was released to the public or anything else, I was just trading smaller positions than I would normally trade to limit my risk. And quite frankly, I was not a day trader before this. So I've always just been comfortable trading what I've traded and never moved it up to full positions. I guess after 2 years of what we 2 years of what we've done, I think it's probably safe to do so, but I just haven't. From an account values perspective, I base everything off of a $100,000 account. So my account is not that. It's higher, but that's irrelevant. That's the other reason I trade the 25 contracts is I just want that 100,000 basis out there. So I keep it the same. On a personal level, I could probably do better with more contracts, but just for the ease of understanding it for myself and for you guys out there, I'd keep it at that 25 based on a 100K account. So we can see like what our percentage is on the year. If we're basing it on 100K account and we're doing good sizing, which is 1 to 5% or so, we should be fine on doing 25 contracts on a 100K account. And that way at the end of the year, like last year, we made 35% on that 100K account. This year, we're already up 29% on a 100K account just in the first quarter, and April's going to add to that. So it's been, a strong indicator, pretty strong indicator. Let's see if we get a put signal here, or a sell signal. They've rejected the overnight high, so we'll see if they're going to fully reject it or this is just a quick pullback before they start to trend higher. Okay, so more recently, would you say that the volatility is small enough to go for full or three-quarter size? Yeah, so there was, a time there in early April where I actually reduced down to 10 contracts because options prices were like $5, $6. Some days were $7, outrageously high. So I reduced all the way down to 10 contracts during that time, 60% less, because you have to understand the risk. I mean, the risk is so high at those levels. But with the volatility calming down, I think about a week ago or so, roughly, I went back to have the full 25 again. But yeah, I think that right now you could do full size if your capital can handle it. That's the biggest thing. It's not so much about how many contracts you buy. It's about how much of a percentage of your capital you're putting forward. You should only really be on a full size. You should be putting out, I say 5. You could do probably up to 7 or 8% and still be okay. I like to keep it a little more conservative, but a full size position is 5% of your capital, knowing that you're going to stop out at some point if you have a losing trade. So you're never going to probably lose that whole 5% unless something really weird happens. You probably lose like 1%, maybe 2%, if you're doing it right. So you would have to lose, 100 trades in a row to go broke on that model. But in general, I think right now you're okay to be at full size if that's what you're comfortable with as far as volatility goes. So the goal is to keep the ratio 5,000 to 100K max. Yeah, I mean, that's what I try to do. Um, I realize that the volatility is still a little bit high. Like 250 today was actually a little more than 5,000 for the um, full position or for the 25 contracts. Um, but not a significant amount. And again, you're not going to lose the whole 5%. Um, so it's a little bit high still. 250 is high for most of the time. Options run between $1 and $2 on normal volatility. For for where we're at in the money, about one strike out of the money. Right now, they're still elevated. They're at 250, which projects about a 5-point SPY move. That doesn't mean it has to be in one direction. It just means they're projecting 5 points of SPY move, and I think they've already got that 548 to 552. Yeah, so basically they already got 5 points up here, and now they're rejecting off the pre-market high. When you say 5% of capital, do you mean global portfolio or the portion reserved for day swing trading? I mean, it can be either. It depends on what you're comfortable with. If you've got day and swing trading account that is, you know, big enough that it doesn't matter, like you're trading 100K or something, and you want to use just that for your ratio, yeah, that's fine. Hold on, we might have a put coming here. Um, but if you need to use your whole account and you're okay with understanding if you need cash to day trade, you would have to possibly liquidate assets. I wouldn't necessarily want to do that, but you can do that. Why do you think the call resistance is at that level? Or is it just what the market makers have determined? Well, the call resistance is just where the options flow is for any given period in time. If we zoom out, there's probably a reason for it. We haven't been this high in a while, huh? Let me look at a different chart here. What's it at? 555? We'll look in a minute here. I want to make sure we don't get a trade coming through. Okay. We go to the hourly here. 2 hours. So it's at 555 right here. So it's this peak right back here. So they spiked it up here. Coming back into that breakdown area right here would be a big reason. They also spiked that area and came back above it. They were unable to hold below 555. So this has been a key area. They spiked below it here and came back above it real quick, spiked it here. So 555 is just a chart resistance. It's starting to turn ugly on that 2 hour candle. Bulls better get back in shape here. Thanks for sharing your expertise with us. You're welcome. Thanks for being here. I appreciate all you guys on the stream today. Sorry for the glitch earlier. Computers are my kryptonite. This is a computer bought specifically for high memory and YouTube videos, etc., etc. And I'm not so sure that's the case. But anyway, we got through it. Nothing crazy happened while I was rebooting, and we were able to have a winning trade. Only one trade today. Quiet day as far as that goes so far. We'll see if we get a short here to ride back down to the pre-market low, hopefully. But obviously that's going to be to be determined. So you had a pretty strong move up, and so that's going to take a minute for the market to determine that the bulls are weakening to a point that it wants to short. So you don't, when you have a strong move up, it takes a little longer for a sell to appear because the bulls have proven that they are strong. You know, they've run it up 50 points here, 40 points on the ES, 4 points on the SPY, which is a big move. So for the indicator to decide that this is more weakness and not just a pullback takes a minute. So right now the indicator is viewing this as the potential for this until things change, and then once it changes, it'll issue a sell signal. Problem is they're going to come into major support here, the VWAP EMA 21 area, so that will be an area to watch. If we do get a short, that would be not an ideal entry area, but they're, as I tell the people in my room, the indicator is smarter than I am and understands the market better than me because it's looking at all 174 things at once, whereas I'm just looking at price action short term. So I always trust the indicator, and when it fails, it fails. Like I said at the beginning, guys, psychologically, you're just trying to find an edge. So I would say 60-40 is probably the indicator edge, and then you're trying to apply that edge relentlessly. Should see a little bit of a bounce here. Maybe not a reversal, but maybe back up to 551 or so. If they just blow through it, well, there you go. Guys, there is a deal that if you haven't watched my videos, nightly videos, that if you buy the yearly indicator, it's a pretty incredible deal. And the reason I say that is because, one, you get 2 months for free of the yearly indicator. So you get the year for $590, and it's $59 a month, so you're paying 10 months for 12. On top of that, you get 50% off of TradeWaves Academy, which is about $250 off. And if you get TradeWaves Academy, you also get the Elliott Wave for Beginners course for free and the Advanced Elliott Wave course for free, which both cost about $177. So you can get the year of an indicator, the TradeWaves Academy 10 2-hour courses, the Beginners course, and the Advanced Elliott Wave course for about $700. And if you bought all that separately, it would cost you about $1,200. So if you want the full package of, here's the indicator, okay, so that's buying the indicator. TradeWaves Academy tells you how price action works, how the options work. It's a deep dive into psychology, options, support and resistance, price action trading, all of that kind of stuff. So it gives you kind of a script of how the indicator sort of works, as well as all of the things that go along with trading, such as options and psychology and all the other stuff I mentioned. And then on top of that, the Elliott Wave for beginners courses tell you how to kind of understand market trends, key levels, and things like that. So wrapped up into one package, it can completely transform your trading experience. All right, the ES is ready for a short. We need to get the NQ on board, and then we'll be ready to go here. They are coming into a decent support area. It's not what I would call great, but it's okay. I'd suspect we'll get a sell on this bar, potentially. And the NQ doesn't want to give it up. What is the name of that package? The full package? There's no name for it. So what happens is you buy the indicator, the year indicator, and I give you a coupon code for the TradeWaves Academy, and then you use that coupon code to get half off, and then you automatically get access to everything else. So it's just you get the yearly indicator, and then I give you the coupon code, and the rest of it is included in that coupon code. Do you live stream every day in your chat room? I don't. It's too much. It's a lot to be on here talking the entire time, putting in trades, monitoring trades, putting in all the information into the chat room and streaming. I do it once a week on Tuesdays for the public so everybody can see, so that you can see how the indicator works, what kind of information I get out, what kind of level give out, what kind of levels we're looking at, that kind of stuff. Okay, there's our sell signal. So we're going to be at 550 at 215 is what we got at. And our stop is going to be 550.40. Guys, if you purchased the indicator, I can see a bunch of you did that. I will get to you as soon as I can. Right now on live streaming, I can't give you access, but I will as soon as the stream is over. You'll have access moving forward. So let's see if this sell plays out. They are below VWAP in the 21, which is a good sign. There is a little bit of resistance here, and I would expect a back test of this area. So if they don't back test, that's great. Then it's probably more of a straight sell down. Okay, so we got in at 215, so that's 2142 is 57. So 260 will be our first take. If the sell signal isn't coming because the drop is already quite down, are we getting a buy signal next? No, you're still in a buy cycle. The sell signal is coming. In fact, it did come. Until you see a sell signal, the market is in a buy cycle. So it's not going to give you a new buy. The issue is the NASDAQ wasn't moving down as strongly as ES, so it took a while for the NASDAQ to get on board. And again, when you have a strong move, to get a counter trend set up takes time. For the indicator to decide that the market is fully weak. So because normally what happens is, right, in a normal circumstance of the market, you get a move up, then you get a pullback, then you get a continuation, right? So the indicator wants to make sure that you're not getting, as sure as it can, that you're not getting trapped here in this pullback. And it probably was waiting for NASDAQ to break a key level of some kind. I can't watch all the things, but I can see that the NASDAQ was the issue. So it's trying to, it's not making sure, it's trying to make sure that this isn't a going to be a higher low situation. Can it still be a higher low situation? 100% it can be. Can this trade lose? Of course, that's part of trading. But it has deemed that a key level has broke, or that a key area is broke, and all the other things aligned enough for it to want to take the trade. And we'll see just how it works out. So we had 550.40 as our stop. Not quite there yet. Here's the back test of VWAP and the 21. Assuming they can hold this back test, you would see follow through to the downside. If they don't hold this back test, then we're likely on our way higher. So when we're looking for a trend day, if you haven't seen it in the videos how we identify that, the first thing we're looking for, if you're looking for a trend up, let me keep an eye on this here. We may have to stop out 1 sec here. All right, they're holding so far. If you're looking for a trend up, so you would be looking for them to either test and or break over the pre-market high. So they came up into the pre-market high. Then you want to see all pullbacks hold the 21 and VWAP. If they don't hold this area, or they can spike and reverse it real quick, that's still holding the area. If they don't hold here, then you're likely looking at continuation back down to the pre-market low. If they do hold here, so if they pull back and they hold and they come back and take out this high, then it's very likely this is going to be a full-on trend day for the rest of the day, and we're going to ignore sell signals when that happens. So we try to identify a trend day as quickly as possible, but the market has to give us the parameters for it first. And if we see that, then we can adjust our trading, because, again, the indicator, guys, is looking for pivot points. It's looking for a major resistance zone here to trade off of. But if we're in a trend day, it may do this, but it's not going to follow through. So you get a sell signal that doesn't follow through, and it's a losing trade, and then they continue because it's a trend day. So resistance isn't going to hold on a trend day. So it keeps us out of losing trades if we just realize those facts. Looks like you're going to probably get us here. We'll see. Yep, there they go. Okay, we got stopped there at $1.77. If they issue a new sell, we'll see how it looks, but we'll probably still take it. So this is the essence of let your winners run and get your losers out quick. If we look at our 2 trades so far, we are, the first one we were plus 58. The second one, we were minus 28. That leaves us 30 cents of profit times 2,500, $750 for the day. Bye, guys. Have a wonderful day. Hi, buddy. I see you. Yeah, have a good day at daycare, okay? I love you guys. Have a good day at school. Bye. So that's 750 profit for the day. If you have, you know, that, and that's a one win, one loss day. It's a 50-50 day as far as trades go. But because of the style of the system and how we use it, we make 750. If you multiply that by, I think it's 220 trading days. That's $160,000 for the year. Obviously, you're not going to have that every day. You're going to have some red days. You're going to have some better days. It's all evens out. But like I said, for the first quarter, we're up 29,000, and on a 100K account. So if you multiply that by 4, then you're still looking at 120,000 for the year, which is pretty darn good. My husband loves your video. He's amazed at how correct you are. Well, tell him thank you. I appreciate that. It's all about key levels. I don't really want to sit here and say, see, I was right. I want to say, see, we stayed above that key level. This is what happened. We went below that key level. This is what happened. Remember, being right or wrong in the market is irrelevant. It really is. That's all about you wanting to fulfill yourself and feel good about what you said out loud, instead of understanding that we're going to trade into this key level, and if it breaks, X happens. If it holds, Y happens. You have two paths, you have two understandings of the market, and you know what happens if that level holds or breaks, and that's all you need to know. So I just wait patiently to see what happens, and then we trade off of that, or we analyze off of that. The probabilities change as key levels hold and or break. This is invaluable. I really appreciate you doing this stream. What was your total loss for the stopped out trade? It was 28 cents times 2,500 or 25 contracts or 2,500 shares. So what is that? About $500. The first trade we made 1,500. No, 1,200. And that one I think we lost 500. So 750 was the total. Let's see, 28 cents times 2,500. So that one, okay. So that was a $700 loser, and our winner was 1,500, 1,450. So here is a key thing to understand about support and resistance while we're waiting as the market moves higher here. When you see the market disregard a support resistance zone, so it came in on this red bar, it came into the 21 VWAP area. Typically, that's going to supply at least a little bit of a bounce. You can see they came into it here, and it spiked back up. They came into it here and rejected and then got through. So typically, you're going to see a little bit of support and or resistance. If they're coming in from the top, support. If they're coming in from the bottom, resistance. When they just move through it like this and they don't stop or give you any kind of support or resistance, you can expect a back test is coming. So they moved down a little further. They back tested. Now, they could have definitely back tested and done this, but they did back test. Obviously, they back tested and are moving higher. And this is starting to look like a potential trend day up. If they break back over the pre-market high, I would be very cautious on any selling that isn't off of a key level. So what I do in my trend day videos, now I have these levels from Mentor Q, which you can get. I don't have any referral link that'll give you a discount, so they don't have a referral program. So I can't help you get a cheaper account. But Mentor Q, these are good levels. So on trend days, so let's say we do it morph into a long day here, right, where it goes this way. I'll probably ignore all sells through here. But if we get up here on this level and get a sell, that one I will probably entertain because this is a major level. These other levels are okay levels. This is a major level. So they should give me a reaction off of here, even if it's just a short one that I can get a quick winner off of, and then they go higher. Even if they do that, we should get a reaction there. So if I see a sell come off of this level, that would be one I'd take. But on most trend days, I'm going to ignore counter moves. So on a trend day up, I'm going to ignore sells. And on a trend day down, I'm going to ignore buys. So that really means we're probably not going to get any trades, right? Because if you're trending, you already have a buy signal right here that is still active. Until a sell prints on the chart, which has not happened, we got a sell, but it didn't print, it didn't hold. Until one holds on the chart, this is still in a buy cycle. So it's never going to reissue you a buy signal until you can get a sell that resets the market a little bit, and then you can get another buy signal. And this is so that essence of that I talked about earlier. So we have one trade winner, one trade loser, right? So this is your baseline. This is your stop out area. This is your first take profit area. Okay, and this cancels out. These two are going to cancel each other out. We took more profit on our first trade up here somewhere. So we took our first take that canceled the stop, and then the rest of this was all extra profit that gave us our winning day. So we were 1-1, but the first take portion of the winning trade canceled the losing trade, and our profit comes from the runner on the winning trade. How did you choose your stop loss? So that's all explained in the videos, the training videos, but and also at the beginning of this one, the on typical volatility. So we are not in typical volatility right now. We're in elevated volatility, which means bigger moves, higher options prices. And typical volatility, where options prices are around $1 to $2, it's going to be 50 cents on the SPY. So if we're at 551.75 here, which basically we're at, and we get a long, my stop is going to be 551.25, so 50 cents under where we're at. If I look at 551.25, and let's say it's down here close to this level, I might extend it a little bit more to give myself a little bit of breathing room here so they can come down, spike this level, and go up. But if not, I just keep it at the 50 cents. Okay, we're getting a sell here. We're going to take this one. Ooh, I wasn't ready for that one. Came quick. Okay, we're going to get it at 551 at 155. So 551 at 155, guys. Let me get this typed out. 551, 155. Let's see where my stop's going to be. We are going to be at 552.30. 552.30 for our stop. So our 155, that's going to be 30 cents. So 185 will be our first take if we get there. Let's see if we can come back and back test the VWAP 21 area here. But in answering that question, the stops on typical volatility is going to be 50 cents from where we're at on the SPY. So on that one, we were at about, I don't know, 551.75 or so. And I gave 552.30. I gave it a little bit higher there. We're in a little bit elevated volatility, so I might go to 60, 70 cents on my stop. Just kind of depends on what I'm expecting and looking for. But yeah, that's how I come up with those stops. Now, until they take out the pre-market high, we can still have choppy up and down trading. So this is not a trend day setup yet. As of right now, I'm sure the indicator is seeing kind of an overbought condition that got a little bit of relief, but then came right back up into this area. This is going to be, this was a breakdown area once, and it should be a little bit of a breakdown again. So we're looking for a little bit of a drop here. Not necessarily a full-on failure. Again, you can have little winners and you can have big winners, and you should only have little losers though. So your little winners, your 20, 30 cent winners should be about the same as your losers, 20 to 30 cent losers. And then your big winners, because you can only have big winners, you can't have big losers if you're doing it right. Your big winners are then what give you the edge. So this is a indicator issued sell stop. I don't use the stops from the indicator, and the reason is I just know how to set my stops for my own personal trading style. This is for people who don't know how to set stops. They can use this as a stop out type of platform. So that's what the SS is if you're curious. They're going to fail here. They're coming into this topping area. This is going to be where it is. If they get above that and can close above that, then we'll likely continue on higher. Sometimes they do, spikes and then down, but very often they'll hold the body of the candles from the breakdown area, and there's the rejection from there. We'll see if they can follow through to the downside or if it's just a quick pullback. Remember, guys, I would say the indicator edge is probably, I could go back and specifically look, but I think it's around 60-40. I have all the trades chronicled. I could go through and get you an exact percentage, but I think it's 60-40 winners to losers, which gets you really strong gains, because remember, you can only have big winners and not big losers if you're doing it the right way. So the reason we use 1 to 5% of our capital is, does that mean we're going to win 6 trades and lose 4 trades if we have 10 trades? Sometimes. But we could lose 10 in a row and then win 20 in a row. That would also fulfill that 60-40 ratio. And we've gone on runs like that. We've gone on runs where we've probably won, 10, 12, 15 trades in a row. And we've gone on runs where we've lost 8, 10 trades in a row. Maybe even more. November of last year, for whatever reason, the volume was really wonky, and volume is a big driver. And so November of last year was a tough month. But again, this is all about psychological trading and probabilities. And if you play the probabilities and you take your edge and you apply it relentlessly, and you use proper sizing so you don't go broke, because if you lose 10 in a row and you put 30% of your equity or your capital in every trade, well, you're going to be broke. But if you're putting 1 to 5% in and you lose 10 in a row, you're going to be just fine. But that's how trading goes. It's certainly not we're going to win 40 trades in a row and never lose. It's going to be, we're going to win 6 or 7, we're going to lose 4 or 5, we're going to win 10, we're going to lose 3 or 4, we're going to win 4, we're going to lose 4, we're going to lose 9, we're going to win 11. Those kind of things. It's never your capital is never just going to go like this. I mean, you're going to have times that it does. We'll just call those C waves or wave threes. But very often, your capital is going to go like this. Because that's just how it works. And you have to be consistent enough and smart enough and disciplined enough to survive these moves. Because they're going to happen. They happen to every trader at every level. It doesn't matter. The greatest professional trader in the world, Warren Buffett, has taken losses. Lots of them. Now, has he taken way more wins? Yeah, of course he has. But he still absorbs losses from time to time. It's just what it is. So this sell signal comes through. It's the same sell signal because we never got stopped out. So um, the chart printed a sell stop, which is fine, but it didn't stop us out, and that's a good thing because then you'd have to stop out, re-enter, and stuff. And that's why I set my stops the way I do, because I don't want to have to stop out and re-enter, stop out and re-enter. I want to make my stop where it's reasonable enough for my trading style, as well as going to give me enough room for them to run back up, back test this high, and then break down off of it, hopefully. We'll see if they can follow through. I'm not super sold on this breaking down, but as I tell my room all the time, the indicator is far smarter than I am. So what brokerage? I use E-Trade and Thinkorswim, or TD. Not, it used to be TD Ameritrade, but now it's Schwab or whatever. Or no, who bought them? Was it Schwab? Yeah, I think it's Schwab. But anyway, E-Trade and Thinkorswim. Most of my trading comes out of E-Trade, though. I use Thinkorswim to test things. That's kind of my test account. So I test different strategies in there. That's money that I can not worry about. And that is not a recommendation of E-Trade. I like E-Trade. I don't mind it. I don't know what's better or worse out there, to be quite honest with you. When I was young, I signed up for an E-Trade account, and I've had it most of my life, and that's just where I'm comfortable trading. I'm very fast in there. I understand how it works. I can get my trades printed out really quickly and get really good prices in there because of I know the system. So that's simply why I use it. It's not because I think it's better or worse for any reason other than I'm used to it. I'll never recommend anything I don't use. So you'll never hear me talk about products that I don't use. I get emails all the time. Hey, will you run an ad for this on your channel? And the answer is no, because I've never used it. So I'm not going to tell people to use something that I don't know if it's good or bad or indifferent. I'll never tell you guys to use something that I don't think is valuable or don't know. You know, I simply don't know if those things are valuable because I haven't used them. But if I use something and I don't think it's valuable, I'm not going to push it just to make money. You know, I recommend TradingView because I like TradingView and I think it's a really great product for me, and they allow me to run my indicator in there and stuff. So I recommend TradingView. And I have a link for it that I do make money off of, but it also gives you a discount. So I'm never going to, if you hear me recommend something, it's because I use it and like it. It's not because I'm trying to make a buck. I don't need to make a buck off that crap. All right. It looks like they are going to get us here. Yeah, there we go. All right. So we stopped out at a $1.23 there. Que sera, sera, as they say. This is starting to look like a trend day, moving back up into this pre-market high area. They've gotten through this support here that I drew that they rejected. Excuse me, resistance. They got through that. If they get through the pre-market high here, that would activate trend day status, and we would likely be looking at 555 next. There are a couple areas. The weekly high here at 553.55 will be a little bit of resistance as well, but I would suspect they will push to 555 overall, and that's okay. That helps our swing long, so I'm not too worried about that. If they do get back above the pre-market high, I will likely go ahead and shut this down because that does activate trend day, and we're not going to trade much anymore. I feel like I've given hopefully some value today and information. Small green day, but green days are good days, right? And we just keep doing that over and over again, and till we have big green days, which we have plenty of. Thank you, everyone, for being here. It is always fun to do this. This has been a better Tuesday than the recent ones that have been trend days. They've all been trend days. This is looking like it's going to be a trend day too, but at least we got some trades out of it and caught the big winner off the rip. So I appreciate you guys. Thank you for being here. Remember, the discount code for the monthly ends as soon as I get everybody signed up. Takes about a half hour. So if you did sign up for the indicator, just give me a few minutes. I'll give you access here shortly. If you didn't, you have about 20 minutes or so to use that code as they break above the pre-market high, activating trend day here. So thanks, everybody, for being a part of this. We'll do it again next Tuesday. And keep an eye out for the podcast that I have. It'll be starting in the next week or two. It'll be on my YouTube channel, but it'll be its own playlist and stuff. It's all about the psychology of trading, and I think it'll really help people understand why they struggle with trading, because it's a mental game more than it is anything else. You can take a bad trader with $10,000 who has a great mindset, and you can take a great trader with $100,000 with a bad mindset, and I will bet you that the bad trader will end up winning that battle. All right, guys, have a wonderful day, and I hope to see you in my room or with the indicator. And if you have any issues, shoot me an email. I'm always happy to answer questions. Thanks, everybody.